Welcome back, everyone. Today, we're diving into the numbers from Info Edge India Limited. They are the powerhouse behind some of India's biggest online platforms.
That's right. We're talking about Naukri.com for jobs, 99 acres for real estate, Jeevansathi for matrimony, and Shiksha for education. A real tech-driven classifieds and services giant. They also have significant investments in companies like Zomato and PB Fintech.
Indeed. So, Info Edge has released its audited, standalone, and consolidated financial results for the fourth quarter and the full financial year ended March 31st, 2025. The Board of Directors approved these results at their meeting on May 27th, 2025. Let's start with the standalone performance for Q4 FY25. How did the core operations look?
Okay, looking at the standalone numbers for Q4 FY25, and these are quite insightful as they often reflect the core business performance without the complexities of associates and joint ventures. The company reported billings of 984 crore rupees, which is a solid 19.0% increase year over year.
19% growth in billings. That's strong. What about revenue from operations?
Revenue from operations on a standalone basis for Q4 FY25 came in at 687.1 crore rupees. That's a healthy 13.0% increase compared to 608.3 crore rupees in Q4 FY24. Quarter over quarter, it's also up slightly from 671.5 crore rupees in Q3 FY25.
And the operating profitability on these standalone operations?
The standalone operating profit for Q4 FY25 was 231.5 crore rupees. This is a 3.0% increase year over year from 224.8 crore rupees in Q4 FY24. However, quarter over quarter, there's a dip from what would have been a higher Q3, as Q3 FY25 operating profit was around 341.5 crore rupees based on the reported PBT before exceptional items in the financials, which is a different metric than the operating profit usually highlighted in presentations. The operating profit margin for Q4 FY25 stood at 33.7%.
A 33.7% margin is quite good. Now, let's look at profit before tax or PBT on the standalone side.
Right. For standalone PBT, before exceptional items, Q4 FY25 was 309.9 crore rupees, up from 297.6 crore rupees in Q4 FY24. Sequentially, it was down from 341.5 crore rupees in Q3 FY25. After considering exceptional items, the standalone profit before tax for Q4 FY25 was 317.5 crore rupees. This compares to 285.5 crore rupees in Q4 FY24 year over year and 282.2 crore rupees in Q3 FY25 quarter over quarter.
And the bottom line, profit after tax or PAT for standalone?
Standalone PAT for Q4 FY25 stood at 255.1 crore rupees. That's a nice jump from 210.9 crore rupees in Q4 FY24. Quarter over quarter, it's also up significantly from 200.2 crore rupees in Q3 FY25.
How does that translate to EPS on a standalone basis? And I believe there was a stock split, so these would be adjusted figures.
Correct. The company had a stock split where the face value changed from 10 rupees to 2 rupees, effective May 7, 2025. So all EPS figures are adjusted. The standalone basic EPS before exceptional items for Q4 FY25 was 3.82 rupees, which is up 10.4% year over year from 3.46 rupees in Q4 FY24. Sequentially, it's slightly down from 4.01 rupees in Q3 FY25. If we look at EPS after exceptional items, it was 3.94 rupees for Q4 FY25 compared to 3.27 rupees in Q4 FY24 and 3.09 rupees in Q3 FY25.
Any significant other income or exceptional items on the standalone side for this quarter?
Yes, standalone other income for Q4 FY25 was 78.4 crore rupees, which is a slight increase from 72.8 crore rupees year over year and also marginally up from 78.1 crore rupees quarter over quarter. As for exceptional items on the standalone front, there was a gain of 7.64 crore rupees in Q4 FY25, which is noted as a gain on fair valuation of non-current investment. This compares to an exceptional loss of 12.1 crore rupees in Q4 FY24 and a loss of 59.3 crore rupees in Q3 FY25.
Okay, that covers the standalone picture well. Now let's shift to the consolidated results for Q4 FY25. How does the revenue look there?
On a consolidated basis, revenue from operations for Q4 FY25 was 749.6 crore rupees. This is a strong 14.0% increase from 657.4 crore rupees in Q4 FY24. Quarter over quarter, it's up from 722.4 crore rupees in Q3 FY25.
And the consolidated profit before tax? This usually includes the share from associates and joint ventures, right?
Exactly. The consolidated profit before tax for Q4 FY25 after exceptional items and share of joint ventures came in at a very strong 741.6 crore rupees. This is a massive jump from 162.4 crore rupees in Q4 FY24. Sequentially, it's also significantly up from 371.1 crore rupees in Q3 FY25.
Wow, that's a huge increase in PBT. What about the profit after tax attributable to the parent company?
The consolidated PAT attributable to equity holders of the parent for Q4 FY25 was 463.4 crore rupees. This is up dramatically from 60.4 crore rupees in Q4 FY24 year over year and also up from 242.6 crore rupees in Q3 FY25 quarter over quarter.
And the consolidated EPS?
The consolidated basic EPS after exceptional items and attributable to the parent for Q4 FY25 was 7.16 rupees. This compares to just 0.94 rupees in Q4 FY24. Sequentially, it's up from 3.75 rupees in Q3 FY25. If we look at it before exceptional items, the consolidated basic EPS was 6.77 rupees for Q4 FY25 versus 3.44 rupees in Q4 FY24 and 4.46 rupees in Q3 FY25.
That PBT jump is substantial. Was other income a big driver on the consolidated side or any major exceptional items?
Yes, other income was very significant on the consolidated front. For Q4 FY25, it was 520.8 crore rupees, a massive increase from 151.3 crore rupees in Q4 FY24 and 187.1 crore rupees in Q3 FY25. This large other income component is a key reason for that PBT surge. Regarding exceptional items, on a consolidated basis for Q4 FY25, there was a net gain of 25.5 crore rupees. This mainly comprised a gain from the provision of diminution/impairment in carrying value of non-current investment of 24.0 crore rupees and a gain on fair valuation of non-current investments of 1.5 crore rupees. This compares to a consolidated exceptional loss of 162.0 crore rupees in Q4 FY24 and a loss of 45.8 crore rupees in Q3 FY25. Also, the share of net loss from joint ventures accounted for using the equity method was 15.7 crore rupees in Q4 FY25.
Okay, so the consolidated picture is heavily influenced by that other income. What about profitability margins? We had 33.7% operating margin for standalone. How does consolidate compare?
It's a bit different for consolidated due to the structure and that large other income. If we look at the consolidated profit before tax, before exceptional items and share of JVs of 731.8 crore rupees against the revenue of 749.6 crore rupees, the margin is exceptionally high, around 97.6%. This clearly shows that a significant portion of consolidated profit comes from non-operational, likely investment-related income. It's important to distinguish this from the core operational margin of the standalone business.
Understood. Any quick insights from the balance sheet for both standalone and consolidated, especially regarding investments?
On the standalone balance sheet as of March 31st, 2025, total assets were nearly 33,000 crore rupees. Investments, both non-current and current, made up the bulk of this at around 28,762 crore rupees. Total equity stood at about 27,701 crore. For the consolidated balance sheet, total assets were around 42,771 crore. Investments here were even larger at about 33,430 crore rupees. Equity attributable to the parent was around 34,903 crore. Goodwill was about 322 crore. An investment in associates and joint ventures was a significant 4,231 crore rupees.
What about cash flow and dividends?
The investor presentation highlights that for Q4 FY25, standalone cash from operations before taxes was 536 crore rupees, a nice 15% year-over-year growth. The company has also recommended a final dividend of 3.60 rupees per equity share for FY25 on the post-split face value of 2 rupees. The record date for this is July 25th, 2025, and payment will be on or after September 2nd, 2025.
Now, let's delve into the segment performance. The investor presentation usually has some good breakdowns for Naukri, 99 acres, and the others.
Yes, it does. Let's look at Q4 FY25 figures from the presentation. For Naukri, Recruitment Solutions, billings were 740 crore rupees, up 18.4% year-over-year. The operating profit for Naukri was 278 crore rupees, up 7.9% year-over-year, with an operating margin of 54.5%. For 99 acres, real estate, billings were 160 crore rupees, a strong 21.9% year-over-year growth. The operating loss for 99 acres was 15 crore rupees, which is a slight improvement from a similar loss last year. For Jeevansathi, matrimony, billings were 32 crore rupees, up 23.9% year-over-year. The operating loss significantly reduced to 2 crore rupees from 9 crore rupees in Q4 FY24. That's a 75.7% improvement. And for Shiksha, education, billings were 52 crore rupees, up 15.9% year-over-year. It reported a small operating loss of 1 crore rupee for the quarter.
That's a good overview of the segments. Recruitment still the profit engine, but good to see improvement in Jeevansathi's losses and continued growth in 99 acres billings. So, summarizing the overall performance for FY25 and specifically Q4.
Year-over-year for Q4, the standalone business showed good revenue and billing growth, with stable operating profits. The consolidated PBT and PAT saw massive jumps, largely driven by other income. Sequentially, Q4 standalone operating profits saw a dip from a strong Q3, but PBT and PAT were up due to favorable exceptional items and other income. The consolidated sequential performance was also very strong.
Any other significant notes from the financials we should touch upon? We mentioned the dividend and stock split.
The nature of exceptional items is key. The standalone gain was from fair valuation of an investment. The consolidated gain was a mix, including a notable gain from provision adjustments related to non-current investments. Also, the significant OCI loss on the consolidated side of over 10,500 crore rupees for Q4 due to fair valuation of investments like Zomato and PB Fintech is important to note, even though it doesn't hit the P&L directly for these specific items.
Now, a critical part, the auditor's report.
What did SR Batliboy and Associates LLP have to say?
For both the standalone and consolidated financial results, the auditors, SR Batliboy and Associates, have issued an unmodified opinion. This means they believe that the financial statements give a true and fair view in all material respects. For the standalone audit report, there's an other matter paragraph, which is standard, stating that the Q4 figures are balancing figures between the audited full year figures and the published 9-month unaudited figures. For the consolidated audit report, similarly, there's the other matter for Q4 balancing figures. It also mentions that their opinion on the consolidated results, insofar as it relates to amounts and disclosures for certain subsidiaries and joint ventures, is based on the audit reports of other auditors or unaudited financial statements. However, they state that these amounts are not material to the group. The company also provided a declaration confirming the unmodified opinion from the auditors.
So, clean opinions from the auditors for both standalone and consolidated results, which is reassuring. Based on all this, what's the outlook for Info Edge?
The recruitment business, Naukri, continues to be robust, showing good billing growth, which is a positive indicator for future revenues. The non-recruitment businesses like 99 Acres are growing their top line, and Jeevansathi is making strides in reducing losses. The cash generation from standalone operations is healthy. The consolidated results will continue to be influenced by the performance of their large investments. Key risks would include macroeconomic factors affecting the job market for Naukri, competition in all segments, and the volatility of investment valuations impacting consolidated numbers.
Excellent. So, to wrap it up,
Info Edge's Q4 FY25 shows a strong operational performance from its standalone businesses, especially Naukri. Billings are up and cash flow is healthy. The consolidated financials reflect these operational strengths but are also significantly boosted by investment-related income. The clean auditor reports are a positive. The key will be to watch how the recruitment market trends and how the company continues to scale its other ventures towards profitability.
great analysis, as always. Thanks for breaking that down. And for our listeners, remember, this discussion is for informational purposes only and should not be considered investment advice. Always do your own research and consult with a financial advisor.
Absolutely. Thanks for having me.
That's all for this episode. Join us next time for more financial insights.